This is Matthew Cratter from Trade University, and today I obviously want to talk about Bitcoin breaking 20,000. This is one of those things you might expect to happen on a fairly illiquid weekend. We have Monday as a holiday in the US stock market, and it's these 3-day weekends. Even though crypto trades 24/7, you often get a lot of crazy things happening over 3-day weekends when people know that there's less liquidity and they know that there's a few days before the full liquidity comes back. That being said, we are seeing very high trading activity in Bitcoin. Bitcoin broke 20,000, it broke 19,000, and it's now currently trading. It bounced a little bit, trading at 19,168. I think we've entered this phase where people aren't just dumping because they want to. They're dumping, at least a lot of people are dumping, if not because they're completely terrified, but because they have to. We're seeing forced liquidations, margin calls, really what looks like an outright panic. This looks a lot like capitulation and the big red candlestick that we've been talking about. So this makes me suspect that the bottom is closer than most people believe. We do know that Three Arrows, one of the largest crypto hedge funds, is in trouble and is going to need to be liquidated. It's probably being liquidated as we speak. There are probably other hedge funds, other institutional investors, other whales or large investors who are in trouble because they used too much leverage and or they had exposure to altcoins like Luna, Ethereum, etc. There may be other institutions ready to blow up as well, other lending institutions. I made a video yesterday about BlockFi, which you can check out. This is an environment in which it's very, very important to not leave your Bitcoin on an exchange or in an app. Make sure you're holding your own private keys. Make sure you've withdrawn that Bitcoin and holding it on a hardware wallet. And I have some links in yesterday's video, which I will repeat below, how to withdraw your Bitcoin from an exchange. If you leave your Bitcoin on an exchange like Coinbase and Coinbase blows up or goes bankrupt, which I should be very clear, I don't think is going to happen, but when the tide goes out, this is when really bad things happen. If you leave your Bitcoin on an exchange like Coinbase and it blows up, your Bitcoin will be included as part of the general assets of the firm in bankruptcy, so you will not have first access to it, and you'll be lucky probably to get 5 or 10 cents back on the dollar. This is not to panic anyone. This is not to cause a bank run, but the bank runs are already happening, and it's very important that your Bitcoin is secure. What I think is happening here is a lot of people, a lot of institutions basically said, I don't think Bitcoin ever goes below 20,000 again. And this is certainly something that I believed. I think a lot of people took out Bitcoin loans and put their margin call level, basically their liquidation level, if they don't put up more collateral, around 20,000, just as the previous all-time high. And now that this is breaking, we're seeing people panic. We're seeing people who have taken out Bitcoin loans with these liquidation levels having to post more collateral or get liquidated. We also have this options phenomenon where options dealers and anyone who is short a put position on Bitcoin, they need to sell more Bitcoin to hedge, to get delta neutral as Bitcoin falls. So paradoxically, the lower Bitcoin goes, the more they need to sell as their delta approaches -1. So this is also contributing. We have all these different factors, but this really does seem like a liquidation candle to me. Nothing has changed with Bitcoin fundamentals, and I should say here before I go on, I haven't sold a single sat. I've been buying Bitcoin, and I've been buying it because I have these fundamental beliefs in Bitcoin that I've expounded over the last 2 years on this channel. Bitcoin is non-government money. It's the only real non-government money we have besides gold, which is obviously not digital and is in the process of being demonetized. Bitcoin is non-government, non-sovereign money. It's peer-to-peer. It's not issued by any state or corporation or foundation or institution like a lot of the altcoins are. It's not a CBDC. It's not a central bank digital currency. It can never be converted into one. It would be a very bad one because it has this fixed supply. It's not a VC coin. It's not a venture capitalist coin like Solana that I've been warning you about. It's not a stupid coin. It's not a dog coin or one of these other ones, which I hopefully don't even need to debunk anymore because people have begun to realize the absurdity. Bitcoin is the most decentralized cryptocurrency that we have. It's incredibly secure. It's based on proof of work. It has this very high hash rate. the forks of Bitcoin could be attacked by just 5% of the Bitcoin miners. So Bitcoin Cash, BSV, these are not secure places to store your money. Bitcoin is permissionless. Anyone can tap into the network. Censorship resistant, especially if you hold your own private keys and you haven't delegated your custody of your Bitcoin. And then finally, and perhaps most importantly, in this environment, Bitcoin cannot be inflated or debased by a small group of insiders. And here I'm not talking about the price of Bitcoin. I'm talking about the money supply of Bitcoin. That 21 million is the max supply. You can try to change that, but no one will follow along with you. You can just change the code in Bitcoin and create your own hard fork, but you won't get the miners and the full nodes and the wallets and the exchanges and everyone to go along with you. So Bitcoin has these very special properties as the first mover among real cryptocurrencies, as the only fully decentralized crypto asset. There's this idea out there that Bitcoin is no longer a good hedge against inflation because it's down year over year, or some sort of argument like this. Here is a guy, also named Matt, in my comments a couple days ago, saying that the myth of a hedge against inflation is gone. If you bought Bitcoin 4 years ago, you are at a loss, a lol. Now this, he's obviously just glancing at Bitcoin 20,000 and saying Bitcoin's gone nowhere, but he's failing to understand what has happened with the US dollar since then and what has happened with consumer price inflation. So this is the CPI index, and we can go back and see where this index was trading approximately 4 years ago. So we don't have June data yet. We only have May of 2022 data. So we'll go back and look at May of 2018 data. And again, the CPI understates inflation, but it's still one place to look. So the CPI index is up 16% since May of 2018. This is again the most recent numbers. This is obviously way too low, and it shows what a bad measurement the CPI is. But as you'll see, it doesn't really matter for this calculation. So we have had this inflation. So $20,000 worth of US dollars doesn't buy you as much as it did. Meanwhile, if we go back and look at the price of Bitcoin 4 years ago, so in this case, I'm not using the CPI dates because those are lagged. I'm using today's date, June 18th, 2022, and then June 18th, 2018. Bitcoin 4 years ago was on the same date was 6,707. Today it's roughly 19,000. Even after falling so much, it's still up 183% over this time period. CPI inflation since May of 2018 is a lot more than 16%. It's probably over 100%, maybe even it's close to 183%. But Bitcoin has been a good place to hide. So this commenter is actually wrong about this when you do the calculation. So the only problem with Bitcoin is it is volatile, and this is not a secret. This is not something that people who have bought into it are unaware of. And the reason Bitcoin is volatile, one of the main reasons, is it is this emerging asset. It's like a startup, but a completely decentralized startup. And Bitcoin right now today has a market cap of only 364 billion. This is the size of like an American bank or a small tech company. It's a very small, it's still a very small market cap. And there's a lot more money or value or savings, whatever you want to call it, outside of Bitcoin versus inside of Bitcoin. Bitcoin has this fixed maximum supply. It doesn't create more supply when the price goes up. So it's very, very subject to demand. And it can move a lot because of this, because there's so much more money outside of Bitcoin versus inside of Bitcoin. As that money rushes in and out, it can move Bitcoin's fiat price a lot. In the same way, when Amazon was small, when it was a couple $billion company, it went down 90% a couple times. It was extremely volatile as well. But people who understood Amazon, who understood Jeff Bezos, who understood what their moat was, what their first mover advantage was, and just understood the genius of Bezos, they were not worried about these drawdowns. They were obviously extremely painful. If you hold something that goes down 80, 90%, you look like an idiot and you lose your money if you're running a hedge fund. And so this is something that can only be done by people with very long time horizons who understand the underlying asset. And now as we're in this crypto or Bitcoin winter, whatever you want to call it, this Fed cycle, people's convictions are really being tested, and it's becoming apparent who really understands this asset and who is in it, not just for the price appreciation, but for the Bitcoin revolution. In the meantime, until Bitcoin gets into the tens of trillions, it is going to remain volatile. Maybe it remains volatile forever, but I don't think so. I think you can use the analogy of something like Amazon or Facebook or Apple, which are very volatile in the early days, and as their market cap grew, the drawdowns became less and less, simply because once you have a lot of value inside of Bitcoin, once you have the majority of the world's value being stored inside of Bitcoin, which is, I'm convinced, where we're headed, then there's going to be less volatility because there's going to be less money or value or savings moving in and out of Bitcoin. The U.S. Treasury cannot stop Bitcoin. Governments cannot stop Bitcoin. The Fed cannot stop Bitcoin. They can tank its price in the short term, but in the process, they are cutting off their own nose to spite their face. They are tanking all assets. They're tanking stocks and bonds and housing and Bitcoin. They can only do this temporarily, as we've talked about many times on this channel, before budget deficits explode because of lower tax revenue, because of a recession, and as the U.S. government has to spend more in a recession to try to shore up aggregate demand, you'll have these very wide budget deficits, and the Fed will be forced to go back to buying treasuries, buying new treasury issuance that's funding the government. So this is what's called monetizing the U.S. debt, where the Fed prints up brand new money and buys government bonds to help pay for government spending. This is the only way out. The only other way out is austerity. Austerity never works. People don't want their Social Security and Medicare cut. People don't want the lights to be turned out. And if politicians try to do that, if politicians tell you to tighten your belt, you will vote them out of office. This is what always happens. And this is why these episodes always end in inflation and hyperinflation. This is where the US dollar is headed eventually. But in the short term, the US dollar is strengthening against everything, literally everything except a few commodities, obviously the energy complex. And that's a very interesting thing to think about in itself. I believe the Fed's going to be forced to cry uncle. Something is going to break either sooner, probably sooner rather than later, but certainly by the third quarter, by, let's call it 60 days before the election, sometime in September of 2022, the Fed is going to need to start printing again or doing something to become more dovish. Otherwise, we're going to have money market dysfunction. We're going to have treasury liquidity dry up, and we're going to have real problems in the plumbing of the U.S. financial system. Meanwhile, Bitcoin is back down to this amazing level, the 200-week moving average, which is a line that's never declined. We can see that these were multi-year buying opportunities in March of 2020 when it last traded below the 200-week moving average. Again, each of these candlesticks is a week. Likewise, in January of 2019. Back in March of 2020, Bitcoin really only spent, call it 2 weeks below this moving average. We can see it right here. It did some long candlesticks, didn't stray too far. It didn't close on weekly closes too far below the moving average. So this is another thing that makes me think that the bottom is very close for Bitcoin. Hodling is hard. If you want 150%, 200% average compounded average returns, you cannot do without volatility. If someone's trying to give you that without volatility, you know they're like a Terra Luna or an Anchor or a Bernie Madoff or something. There is volatility in the real world, and this is how you can tell that it's a real asset. Not that it's not being manipulated. If something has zero volatility, it actually is being manipulated and it's probably going to blow up. If it has this natural volatility, just like you look outside, you see the weather, you see the ocean, there's a lot of volatility in nature and there's a lot of volatility in financial markets. Meanwhile, this is very difficult for human psychology, which is why you have to tamp down your lizard brain. You have to put in the time to understand Bitcoin so you know what you own. And so you're actually happy, as I am, when Bitcoin goes down this low and you're able to buy Bitcoin at these rock bottom prices. I often quote this Paul Tudor Jones, who's a very famous hedge fund manager and trader who made money when the stock market crashed in 1987 and is also a big Bitcoin holder. When Stanley Druckenmiller went to talk to him about Bitcoin, Tudor Jones told him, he said, "Do you know that when Bitcoin went from 17,000 to 3,000, 86% of the people that owned it at 17,000 never sold it?" Druckenmiller replied, "Well, this was huge in my mind. So here's something with a finite supply, and 86% of the owners are religious zealots." This is what we call Bitcoin maximalists, is another name for this sort of zealotry. And this is very important. There's no other cryptocurrency or crypto asset that has the dedication, that has the deep education, and that has the diamond hands, the strong hands of Bitcoiners. Right now, what you're seeing on your screen, you're seeing a massive wealth transfer happening from the weak hands to the strong hands. And I want to make sure that you're one of the strong hands in a time like this, because the real money is made or lost depending on how you handle these bear markets. It's true for the stock market, it's true for the housing market, and it's certainly true for Bitcoin. So I'm still buying Bitcoin. I had my last limit order filled last night at 20,000. I was working a limit order, now working limit orders at 17,500 and 15,000, as well as continuing to make daily purchases, dollar cost averaging. Again, I really wish I hadn't bought so much in the 50,000s and 60,000s. I also bought a lot below 10,000, so that feels good. But I was continuing to buy this entire time. I've never sold a single sat, and I think this is still just rounding error. Obviously, if you buy Bitcoin at 20,000, you have a much higher return when it goes to 500,000 or a million than you do if you buy it at 50,000 or 60,000. But it's a question of, are you buying a dollar? If Bitcoin's going to $1 million, as I believe it is, are you buying a dollar for 5 cents? Are you buying a dollar for 4 cents or 3 cents? Or right now, are you buying a dollar for 1.9 cents? These are the kind of returns we're looking at because of Bitcoin's fundamentals, because it can handle this kind of environment. It's secured by proof of work. It's neutral. It's decentralized. No one can stop it. It's like a global virus, and it can't be stopped by any central banks. It can only be temporarily moved around. But when Bitcoin crashes like this, it actually provides a huge opportunity to those of us who understand this, who understand Bitcoin and realize where it is headed. And so there's this perverse, this ironic thing where the Fed is crashing Bitcoin, whether intentionally or unintentionally, but it's actually making future Bitcoiners richer than they would otherwise be. Because if you could buy one Bitcoin when it's at 60,000, today you can buy more than 3 Bitcoin for the same price. And Bitcoin, that's 3 out of 21 million. There is not going to be any more Bitcoin than that. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.